Today on Nerdalific, we're going to go back to our auto budget workbook and determine which incomes will cover each expense. Last week, we took a look at our planning worksheet and entered in almost all of our bill payments. Today we are going to look at our fixed expenses and figure out which income should be covering those fixed expenses. Back to our planning worksheet, let's identify which expenses we are going to look at covering first. For visual purposes, let's do some highlighting. The expenses that are more fixed, that we do not have the option to change in any way, shape, or form, are going to be the mortgage, loans, house insurance, life insurance, mortgage insurance, vehicle insurance, and possibly even car payments. Let's make this a light blue. Can you tell that blue is my favorite color? Most commonly, the fixed expenses tend to be the largest. It's best to find your most reliable or largest income that can cover the rent or mortgage payments. If you don't pay this amount, you'll pretty much be out of a home. So I always consider this a priority payment, the payment that you want to make sure you cover first. You probably already have this set up and you know exactly who is paying or which income is paying that mortgage payment, so you may not need to put a lot of thought into it. We know that the amount is $550 bi-weekly. The total annual amount is here. So depending on which payment we are going to use, we are going to need to know one of these amounts. Let's go back to our budgeting sheet. As you can see, our income here, number 1, is the highest. Now, if it's easier, you could also put a little row under here to tell you whether it is bi-weekly, weekly, monthly. So let's do that. Income number 1 is bi-weekly. Income 2 is bi-weekly. And income 3 is monthly. The reason I did bi-weekly for both of those major incomes is because the majority of people do get paid on a bi-weekly basis. Not very many companies will pay their employees weekly. There's just too much paperwork involved. Again, this is just an example, and I know that you're going to have your own unique scenario that you can calculate yourself. So we'll just call this frequency. That way we know what the heck that row is for. Now I'm going to add a little bit of a border here so that we can separate it from the rest of the workbook. I am going to also make these italics so that we know that they're just notes. So the first expense we said was mortgage. And the first income that comes to mind to cover this would be income number 1 because it is the largest. So $550 is the bi-weekly mortgage payment. Now let's just highlight this section before we forget and change it to the currency format. Alright, so our mortgage is now figured out, which leaves $950 for that pay. Now I'm going to go back to the planning here, and I'm just going to highlight this column here. Why? So that we know that we are paying our mortgage, or we are saving for our mortgage on a bi-weekly basis. Now, for the loans. So we have a monthly of $650, and our monthly income is $500. We know that that will not cover it. So we have a couple of options here, and you may want to put a little thought into this. Now, if you have only one main income, then obviously you don't have a choice but to pay it out of your one main income. We could also continue putting this on the main income because we still have lots of money left. If you're unsure if that income 1 is 100% secure and you're concerned as to whether or not that income is going to be there forever, you may want to split up your biggest payments and put your loan payment under your second biggest income. However, for myself, I prefer to have the highest bill payment still come out of the biggest bill payment. That way you're guaranteed it's going to cover it. So let's go back to the loans. The amount for the bi-weekly payment is $300. So I'm just actually going to do a little shortcut instead of typing it in. It's $300. Hit Control C, and we are automatically copying that information. Go back to the budget worksheet, and I'm going to paste it in row B right next to the word loans. Aha! I was hoping this would happen so that I could show you what to do if you just simply copy and paste something. Now if we click back on this same cell, we know that this data is actually a formula. If you look in your formula bar, you'll actually see the formula. However, in cells G6, it looks like it's just a number. Now, how do you copy this information and paste it into the other spreadsheet without pasting the formula? It is called paste values only. So instead of pasting it with Control V, what I would do is right-click and paste values only. Now you can see that the icon shows a 1, 2, 3 and a picture of a clipboard. If you hover over it without clicking on it, it will also just say values, or in brackets V, and that way you know you're going to paste the values only. In other words, Excel is only going to paste the result of the formula and not the formula itself. And now we're good to go. So let's go back to our planning sheet and we will highlight that $300. Now we know that the loan payment is covered. Next is insurance. This is going to be a little bit different. If you pick up the ebook Nerdalific's Auto Budget by Tanya Stephenson, which is coming out in the spring of 2021, it'll explain this a little bit more in detail. One of the main purposes of the auto budget system is to set up automatic payments and transfers in your online banking accounts. Before insurance, house insurance, life insurance, mortgage insurance, vehicle insurance, all of this is categorized in one section, which is insurance. So all of this I recommend saving in one transfer amount. In the ebook, it explains that each category, I recommend having a separate savings account for each of your categories. That way you can put all of your money specific for that one category into one separate account so you know exactly what that money is for. The ebook also explains that you should consider whatever banking fees your specific financial institution has, because maybe setting up that many savings account isn't feasible for you because of whatever fees they have. So keep that in mind. Now, if for some reason there are extra fees, you should have at least one savings account to save all of your money in. Don't keep it in your checkings account, because if you keep it in your checkings account, you're going to be more likely to spend it. And when I say spend it, I mean spend it on things that you just don't need. If you tuck it away somewhere else, you'll be less likely to waste that money on things you just don't need. What we're going to do is we are going to highlight all of the insurance amounts that are in the biweekly amount. If you're not sure if you've highlighted them all, if you go over to the left side, you'll see the rows grayed out for the ones that you have highlighted. And that way you can make sure that you've highlighted all of the insurance category expenses. All right, I've highlighted all this. And why? Well, let's look down to the very bottom. At the very bottom right, there is an amount. It will give you the average of the numbers highlighted, the number of cells you've highlighted, and the total sum of those cells. $232.15 is what you are going to need to save in one transaction to cover all of these fees. I'm going to highlight this in a slightly different color, a different shade of blue, just so that we can differentiate between which ones are lumped together. To make it easier, let's also highlight the names of these expenses in the different shade of blue. That way we know which ones they are for. So our amount, again, is $232.15. Let's go back to our budget. You could use income one. I don't want to put all of the big expenses on that one income, because if something happens and somebody is sick and misses some time, then you're going to miss your important payments. So what I recommend doing is now moving over to income two. Again, if you only have that income one, then you're going to have to put it under that income one. So the total amount is $232.15. Let's just type that in here. $232.15, and let's just call this insurance. Okay, so now insurance is segregated. Now let's go to the car payments. Car payments would only be $57.69 to save it on any of our checks. I think I'm going to use this with the income number two. That way we're still trying to keep it a little bit balanced. $57.69. Car payment. Now don't forget to refer back to row 3, where it shows the remaining amount that you can use safely from each of your incomes. Now again, this is just my personal preference, but I tend to keep the larger bills coming out of the larger income, and then the next size of bills down from income 2. Every single one of these amounts are not going to change. The insurance amount may change on an annual basis depending on the insurance provider, but we'll never need to change these until that happens. And that is why we call these fixed expenses. In the next video, we'll take a deeper look into your moderately flexible amounts.